Hello everyone, welcome to today's session on goods and service tax filings. Today we are going to see reverse charge mechanism. This topic is a little technical, but yet this is an important topic to understand and comply with the provisions of goods and service tax. So before moving ahead, let us quickly see what we did in our previous session. So in our previous session, we learned about documents like debit notes, credit notes and bill of supply. So credit notes are issued by the supplier of taxable goods and services where due to the reasons like sales return or due to deficiency in the quantity of goods supplied or deficiency in the specification of services rendered, the ultimate taxable value and the tax liability of the seller is reduced. In such a case, credit note is issued. Similarly, debit note is issued when the supplier has charged the amount that is less than the value of supplies, or he has charged the tax rate that is less than the applicable rates. So when a debit note is issued, the ultimate taxable value and the tax liability of the seller is increased. Next, we learned about the bill of supply. So bill of supply is a document that is used instead of a tax invoice in case where the supplier is either a registered taxpayer under the composition scheme or an exporter, or where the goods or services supplied by the taxpayer doesn't fall under the ambit of GST, that is exempt goods, that there is no requirement to issue a tax invoice and rather a bill of supply is to be issued. So let us start with today's topic, that is reverse charge mechanism. In this topic we will understand what is RCM and when it is applied. Also, we will explore the compliance procedure of the RCM and the common mistakes that need to be avoided by a taxpayer while reporting reverse charge mechanism. Let us start with today's topic, that is reverse charge mechanism. In this topic, we will understand what reverse charge mechanism is and when it applies. Then we will also see what are the compliance requirements under RCM, and we'll try to figure out what are the common mistakes that we need to avoid while reporting a reverse charge transaction. So let us move ahead. What is RCM? So since day one we have learned GST, that GST is to be paid by the supplier of goods or services under the forward charge mechanism. But in case where the liability to pay GST shifts from the seller to the buyer, then in such a case RCM is applicable, that is reverse charge mechanism is applicable. So under the reverse charge mechanism, the seller or the supplier of goods or services does not charge any GST in the invoice, rather he will only charge the taxable value of the goods or services, and the GST component has to be borne by the recipient of goods or services. So reverse charge mechanism is a scenario where the liability to pay GST to the government shifts from the supplier to the recipient. Normally, under the forward charge management, where the supplier who supply the goods or services to the recipient is liable to pay the GST to the government. For example, Mr. Ram, who is a registered taxpayer, is availing the transportation services of Nandan Transport, that is the supplier of the service, who is unregistered under GST. In this case, Mr. Ram, who is the recipient of service, is liable to pay tax to the government under the reverse charge mechanism. So RCM is applicable for notified goods and services and some unregistered transactions. Let us understand the difference between forward charge mechanism and reverse charge mechanism. So under the forward charge mechanism, the supplier of goods or services supplies the goods or renders services and raises the tax invoice to the recipient of goods or services. Against such goods or service, the recipient pays the consideration amount along with GST. So in this case, rupees 1 lakh is the consideration amount and GST is rupees 18,000, that is at the rate of 18%. So upon the receipt of this consideration along with GST, the seller or the supplier pays the GST component, that is rupees 18,000, to the government. This is the transaction cycle in a forward charge mechanism. Whereas in case of reverse charge mechanism, the supplier of goods or services supplies the goods or renders the services and issues a invoice that we call a bill of supply, because GST is not charged in it. Upon the receipt of such goods or services, the recipient of goods or services pays only the consideration amount, that is the taxable value, but does not pay any GST on it. Further, the GST amount that has not been paid to the seller will be paid by the recipient of goods or services to the government. On the payment of such GST to the government account, the recipient will also claim the input tax credit simultaneously. So this is the transaction cycle in case of reverse charge mechanism. So what are the legal provisions regarding RCM? So the provisions of reverse charge mechanism is governed by Section 9, subsection 3 and subsection 4 of the CGST Act, Section 5, subsection 3 and subsection 4 of the IGST Act. So let us see how does Section 9 works. Section 9, subsection 1 and subsection 2 governs the forward charge mechanism, whereas Section 9, subsection 3 and subsection 4 governs the reverse charge mechanism, whereas Section 9, subsection 5 governs the e-commerce operators. So reverse charge mechanism under Section 9, subsection 3, that is, it applies to the notified goods and services. Cashew nuts, raw cotton, silk yarn, BD leaves, GTA services, that is goods transport agency services, advocate services and director services. This is an illustrative list of goods and services falling under reverse charge mechanism. So an agriculturist supplying cashew nuts, raw cotton, silk or BD leaves to a registered person falls under the reverse charge mechanism, and the recipient of such goods are required to pay GST on these goods. Similarly, GTA, that is goods transport agency services, also falls under the reverse charge mechanism. So let us understand what is GTA services. GTA means any person who provides services in relation to transportation of goods by road and who issues a consignment note. An important point to note here is if no consignment note is issued, then those services will not be covered under the GTA services and RCM shall not apply on these services. Thus, a consignment note is an essential condition to be considered as a GTA service. The recipient of GTA services has two options to discharge his GST liabilities. One is 5% rate without availing any input tax credit and 12% rate with availment of input tax credit. Next we have advocate services. So legal services or advocate services provided by an individual advocate, including a senior advocate or a firm of advocates, to a business entity, then RCM applies on such services. RCM has to be paid at the rate of 18% by the recipient of such services, and the recipient will be eligible to avail the input tax credit of the reverse charge taxes paid. Point to be noted here is that legal services provided by an advocate or a firm of advocates is exempt from GST if it is provided to any person other than a business entity. Then next we have director services. So director services falls under the reverse charge mechanism on services provided by a director to a body corporate or a company. An important point to note here is that if a director is the whole-time director or a managing director of a company and he is drawing salary under section 192 of the Income Tax Act, then he will not be covered under the RCM. So an independent director is covered under the reverse charge mechanism and his services to the company or body corporate will be governed by the reverse charge mechanism. Okay, so moving ahead. RCM under section 9 subsection 4. When GST was introduced, there was a concept of tax payment on reverse charge mechanism on expenditures in excess of rupees 5,000. So a taxpayer who incurred any expenditure in excess of 5,000 towards any goods or services was required to discharge the tax liabilities under reverse charge mechanism. But this provision was causing undue hardship on the small businesses as well as on the small suppliers. And hence later on, this provision was eliminated. So in today's scenario, RCM is applicable on notified goods and services. So where an unregistered person engaged in supply of goods or services to a registered person and the supply is related to construction sector, that is cement concrete mixer, cement, iron rod, architect services, etc., then the government has the power to collect tax from the recipient under the reverse charge mechanism. So in today's scenario, in relation to a construction sector, we have the following scenarios. If an unregistered supplier supplies cement to a registered person in relation to a construction project, then the recipient of the goods, that is the cement, will have to pay GST on reverse charge mechanism on such supplies. This is specific as cement falls under 28% tax bracket and hence the reverse charge tax amount will also be paid at the rate of 28% under the reverse charge mechanism. Similarly, when an unregistered person supplies any capital goods in relation to a construction project to a registered person, then the promoter or the registered person will be paying the GST under the reverse charge mechanism on such capital goods. Further, an unregistered person supplying input services or inputs in relation to a construction project up to the limit of 20% of the total value of supply shall not be liable to GST under RCM and no GST will be applicable. Whereas, if the limit exceeds 20% of the value of total supplies, then the promoter will have to pay GST under the reverse charge mechanism. So moving ahead, who pays GST under the reverse charge mechanism? So the recipient of goods or services must pay GST under the reverse charge mechanism on notified goods and services. The procedure will be the recipient will raise a self invoice and on the basis of such self invoicing, GST under RCM has to be paid. So once the invoice has been generated, it has to be disclosed in the monthly return or quarterly return as the case may be, and upon the payment of the tax under the reverse charge mechanism, the recipient of goods will claim the input tax credit simultaneously. So here in this diagram we can see the supplier supplies the goods or services and raises the invoice. The recipient of goods pays the consideration amount without any GST and pays the GST to the government, that is 18,000, and claims the input tax credit of rupees 18,000 simultaneously. So moving ahead, how to pay RCM? Firstly, receive the invoice from the unregistered supplier, or if he is not supplying or furnishing the invoice, then generate a self invoice. After generating the self invoice, use the information in the self generated invoice and report the same in the GST portal and pay the taxes using the cash ledger. Important point to note here is that GST under the reverse charge mechanism cannot be discharged using the input tax credit. So it must be paid in cash. So the taxpayer must pay the GST in cash and avail the input tax credit. So the reporting in GSTR 3B should be done in the table 3.1D of the return and the input tax credit information must be filled in the table 4A of the GSTR 3B return. So let us take an example. Mr. Ram, who is the recipient, who is a registered taxpayer, is availing the transportation services of Nandan Transport. Nandan Transport is not registered under GST. In this case, Mr. Ram, who is the recipient of service, is liable to pay GST to the government at the rate of 5%. That is, the goods transport agency charges rupees 10,000. Mr. Ram pays the amount of rupees 10,000 without any GST. He will discharge the liability of 5% GST on the agency charges, that is rupees 500, and will pay this 500 to the government account. Upon the payment, he will claim the input tax credit of rupees 500. So what documentation is needed in case of reverse charge mechanism? self-invoice that is generated by the recipient of services or goods, then payment voucher, the payment that has been made to the supplier, then proof of GST payment. If you are paying GST under the reverse charge mechanism, then a challan is required to be generated and such challan should be kept as a record. Then RCM applicable service list, that is what are the goods and services that are notified by the government on which reverse charge mechanism is applicable and taxes has to be paid under the RCM. Then the vendor master record must contain the details like if the vendor is registered under the forward charge mechanism or under the reverse charge mechanism. Next are the common mistakes while reporting the reverse charge mechanism. No self-invoicing, that is most of the times the recipient of goods or services does not generate a self-invoice to be kept as a record. Then paying RCM from ITC ledger. So as we discussed, input tax credit cannot be paid using the input tax credit ledger. It must be paid in cash only. Then non-reporting in GSTR 3B. There are certain taxpayers who falls under the reverse charge mechanism but are registered under GST. When such vendors raises a bill, it appears in the GSTR 2B of the recipient of such services. So these invoices appears with a remarks that it is covered under the reverse charge mechanism in GSTR 2B. Hence the recipient will pay the GST on these goods or services under the RCM. But there are unregistered suppliers who are not registered and who does not report any transaction, and the recipient correspondingly has to generate the invoice or make the payment. But many a times the recipient of goods or services does not consider the taxes to be paid under GST against the unregistered supplies. So non-reporting in 3B is a case where supplies of goods or services are not reported in GSTR 3B voluntarily and corresponding input tax credit is to be filled manually. Then missing eligible ITC. Again, if GST is not paid under the RCM, input will be missed. Also, it will lead to a non-compliance. So the compliance tips: identify RCM services in advance. Better to keep a list of all the goods and services notified by the government which falls under the reverse charge mechanism. Then pay the GST under RCM monthly. Do not defer it. Then keep clear documentation like payment vouchers and the challans. Regularly reconcile RCM payments and input tax credit. If taxes has been paid under the RCM and input has been claimed, then it must be regularly reconciled with the books. Benefits of RCM compliance: it doesn't attract penalty if you are compliant with the GST laws. Then ensure seamless ITC flow. The input tax credit will never be missed if proper compliances are made. Then demonstrate GST compliances. The accounts team must be aware of the GST under the reverse charge mechanism, and the compliances demonstrate a GST compliances which ultimately enhance the credibility. Helps in vendor management. So a proper vendor list with details like which vendor is falling under forward charge management and which vendor is falling under a reverse charge mechanism will keep the vendors aligned with the business. So to conclude, reverse charge mechanism is a tax where recipient pays the tax instead of the supplier of goods or services. It applies to a specific notified services and unregistered supplies. Then proper documentation and timely payment is the key to proper compliances. So that was it for the today's session. Thank you.